Hello, I'm Tim Beggins, president of Elk Trading Company. In this natural gas weekly recap, here we are looking at natural gas prices for the spot May contract down just slightly here to 353.90, down 1.8 cents or 0.51%. Prices have rebounded a little bit overnight because they were down after the storage report yesterday, but currently right now we're close to unchanged. We're holding still below the daily pivot at 359.10 and holding above support at 343.20. The low overnight was slightly below that at 339.40, but prices are starting to stabilize, and the relative strength index, the indicator at the bottom of this chart, is showing that signs are weakening for further downside. So if the equity markets can stop puking, we may actually see a rally here in natural gas with some very bullish underlying fundamentals, such as rising heat and record exports for LNG. Let's take a look at the hourly chart. As you can see, prices are bouncing off of that pivot support at 343.20 and have now started to move close to that daily pivot at 359.10. If we can break above that, we've got 371.70 for first pivot resistance. If we fall, though, unfortunately, that would be 3.306 for pivot support below the market. Let's take a look at the storage report, which was putting pressure yesterday on the natural gas contract. It was an injection of 57. This was about 5 to 7 BCF above most market expectations. We are currently sitting at 1.83 TCF in the ground. Most people are starting to say, well, it's pretty close to the 5-year average. And what I would say is that's just nonsense. Those are pandemic years, and that's a really bad comparison. We've got rising LNG exports, now a record well over 15.5 BCF on average. And we've got power demand from AI, semiconductors, and more onshoring. And right now, we're still sitting just below 20% from last year. So, in my opinion, it's bullish. Let's take a look at the front to back spreads. This is the January versus the May contract, the spot contract. And as you can see, the RSI is trying to turn higher, which means that we'll start to move and see if we can get this spread out to about 155. The break even for storage here on this spread is well above the market at $1.80. But let's take a look at the back spread, the Jan versus October spread. This spread also, the relative strength index is trying to turn higher. It is going to start to test most likely here at $1, which is the break even. And above that, we've got resistance between 106 and 110. So what's going on in the global markets? Well, we've got so much uncertainty and volatility in the equity markets and every market in general, that gas prices are reflective of that. And as you can see, not only in the US, but also here on the Dutch TTF contract, prices have come down in reflection of that uncertainty. As you can see, this market had been rallying since the end of February and peaked out right around the same time, February 10th, here in 2025. So for the last year, it's been in a bull market, but just recently has collapsed in reflection of equity uncertainty. And so right now, we're currently trading around $11.40 basis US, and that is still pulling cargoes. Why? Because Asia, while it's higher, here is the JKM marker at around $12.60, costs more to transport. So currently, European cargoes are receiving US LNG. There's also the Chinese US tariff war, which is preventing Chinese buyers from picking up those US cargoes and delivering them into China. They're pushing them to other markets like Europe. Let's turn back to the US. The 8 to 14-day temperature outlook is still above normal. And this is in the area of the drought. We'll just show you that map in a second. But as you can see, looks like we're going to have some hot and dry weather for much of the western 2/3 of the country. Florida all the way out toward the Pacific Northwest. So let's look at the drought monitor. And this is a continuing problem, especially expanding around San Antonio and Texas, all the way out toward El Paso, and then parts of New Mexico, Arizona, and Nevada. This looks like this is typical of a neutral ENSO year. And so, unfortunately, we're going to have to deal with this for the next couple of months before La Nina looks to take over for winter. So how are we looking on the nuclear outlook? It actually popped back up right now. Currently, the outages are just over 15,873. And this looks like it's going to peak here in the next 2 weeks before we start to decline all the way toward July. Let's take a look at those stocks we like to look at. These are the oil and gas E&P stocks that are between $2 and $10 billion in valuation and have a high short float. Those include CNX Resources, Comstock Resources, Magnolia Oil and Gas, Murphy Oil Corporation, and Northern Oil and Gas. So how are they looking? Well, for today, things are starting to pop, but for the week, unfortunately, just CRK is up on the week, up 6.72%. As you can see, the rest of it is just in the red. CNX is barely unchanged for the week. So again, looking at those stocks, we like the oil and gas E&P sector stocks with a market cap between $2 and $10 billion. You can see this on finvez.com. And we'd like to see a high short float, which means that once the market turns, that short covering is going to be rocket fuel for these stocks. So let's again recap where we are for the spot May contract. Currently, right now, trading 352.70, down 3 cents on the day. Please let us know your thoughts in the comment section below. Hit that like and subscribe button. Thanks for listening. We'll see you soon.